Welcome back to the Daily Earnings Reports podcast. Don't forget to hit that like button, subscribe to our channel so you don't miss any of our deep dives. Today we're strapping on our scuba gear and diving deep into 3M's Q4 2024 earnings report. To really understand what's going on with this industrial giant, and trust me, it's a bit of a mixed bag down here.
Indeed. On the surface, it looks like a comeback story. 3M exceeding expectations, returning to positive organic growth for the full year, and achieving double-digit earnings growth. But there are some choppy waters with those PFAS liabilities and legal battles.
Okay, let's unpack those headline numbers first. 3M's back to positive organic growth, which is impressive considering the economic headwinds everyone's talking about. But what does that actually tell us about their underlying business?
Well, it suggests 3M's diverse portfolio is a real strength. They're not overly reliant on any one sector, which gives them a buffer against economic downturns. But it's crucial to look deeper. Organic growth doesn't tell the whole story. Which segments are driving this growth? Are there any hidden weaknesses we should be aware of?
All right, we need to go beyond the surface. Now, here's something that caught my eye. 3M returned a hefty $3.8 billion to shareholders this year through dividends and share repurchases. That's a lot of cash flowing back to investors. What's the strategy behind that?
Well, it signals confidence in their future prospects and a commitment to rewarding shareholders. But it also raises questions. Could this focus on shareholder returns potentially hinder investments in innovation, or more importantly, addressing the PFAS issue? It's a delicate balancing act.
You've hit a crucial point. Because on the one hand, returning capital to shareholders can boost stock prices and attract investors. But is it sustainable in the long run? Especially with the looming PFAS liabilities. Speaking of which, those costs came in at a hefty $3.8 billion this year. For those who might not be familiar, can you give us a quick breakdown of what PFAS is and why it's such a big deal for 3M?
Sure, PFAS, or forever chemicals, are a group of man-made chemicals that were used in a wide range of 3M products. They're incredibly persistent in the environment and the human body, and unfortunately, they've been linked to some serious health problems. So 3M is facing increasing scrutiny and lawsuits.
It sounds like they're paying the price for past decisions. Now, 3M is working to phase out PFAS. But how does this impact their different business segments? We know they have their hands in everything from consumer goods to healthcare to industrial products. Where are those PFAS liabilities hitting the hardest?
That's an excellent question. While the report doesn't break down the PFAS impact by segment, it's likely to be felt most acutely in areas where those forever chemicals were heavily used. For example, their safety and industrial segment, which includes products like protective coatings and firefighting foam, could be significantly affected. We need to keep an eye on how 3M manages these liabilities across its diverse portfolio.
It's a complex situation, no doubt. And you've highlighted a crucial point: the devil is in the details. We can't just look at the overall numbers. We need to understand how this PFAS issue is rippling through their various lines of business. Now, despite these challenges, 3M is still projecting growth for 2025, with sales expected to increase and earnings to remain strong. Is this optimism warranted? Or are they downplaying the potential impact of these legal battles and remediation efforts?
That's the million-dollar question. While 3M is known for its innovation and execution, the PFAS situation adds a layer of uncertainty. A 2–3% growth projection might seem reasonable on the surface, but investors need to scrutinize whether it factors in the full scope of PFAS liabilities and potential future litigation.
So we need to look beyond the rosy projections and dig into the potential risks. It's like peeling back the layers of an onion. Now let's talk about segment performance. Their safety and industrial segment, their largest business, saw organic sales decline by 2.4% in the quarter. What's driving that decline?
The decline is likely linked to weakness in industrial markets, which have been hit by slowing global growth and supply chain disruptions. Think about things like automotive manufacturing and electronics production. Those industries have been facing some serious challenges, and that's flowing through to 3M's results.
Okay, so the macroeconomic environment is definitely playing a role here. But on a more positive note, their transportation and electronics segment actually saw organic sales growth of 3.3% in the quarter. What's fueling this positive performance?
That growth is being driven by strong demand for semiconductors and electric vehicle components. These are hot markets right now, and 3M is well positioned to benefit from that growth.
It's interesting to see how the different parts of 3M's business are reacting to these broader economic trends. It really highlights the importance of diversification, doesn't it?
Absolutely. It's like having a diversified investment portfolio. When one sector is down, another might be up. That helps to smooth out the ride and make the company more resilient overall. But it's also crucial to understand the underlying dynamics of each segment. Is the growth in transportation and electronics sustainable, or is it tied to temporary market trends? These are the questions investors need to be asking. You've hit on a crucial point. Diversification can be a double-edged sword. While it can provide stability, it also requires careful management to ensure each segment contributes meaningfully to the overall performance.
Exactly. We need to see if they're allocating resources effectively across these different businesses. Now let's shift gears and talk about 3M's cash flow. They generated $1.8 billion in operating cash flow for the quarter and $1.3 billion in adjusted free cash flow.
Wow.
What do those numbers tell us about their financial health?
Those numbers indicate 3M is still a cash-generating powerhouse, even with the challenges we've discussed. Strong cash flow is vital for any company because it gives them the flexibility to invest in growth, pay dividends, buy back shares, and of course manage those PFAS liabilities.
So it's a sign of resilience, but it also highlights the need to prioritize those cash flows wisely. Now, speaking of investments, let's talk about innovation. 3M is known for its R&D, but how is that translating into tangible new products and growth opportunities? What did the earnings report reveal on that front?
It seems 3M is going through a bit of a portfolio shift, doubling down on areas like automotive electrification, sustainable materials, and advanced wound care markets with high growth potential. They're clearly looking to the future.
Okay, so they're not just resting on their laurels. They're investing in areas that are aligned with broader market trends. But I'm curious, did the report offer any specific examples of this new focus in action? I'm looking for evidence that they're translating R&D into real-world products.
They highlighted some interesting advancements. For instance, they're developing lightweighting materials for electric vehicles, which helps extend battery range, a critical factor in that market. And in healthcare, they're working on bio-based adhesives for wound closure, a fascinating area where they can leverage their expertise in materials science.
So they are putting their money where their mouth is, so to speak. But here's the question that keeps coming back to me. Can 3M really be a leader in sustainability with this PFAS cloud hanging over them? It seems like a bit of a contradiction.
That's the challenge they're facing. 3M knows they need to walk the walk when it comes to sustainability. The report emphasized their commitment to phasing out PFAS and highlighted broader efforts to reduce their environmental footprint, like investments in renewable energy and circular economy solutions. They're even partnering with NGOs on water conservation projects.
It sounds like they're trying to address both the immediate PFAS crisis and their overall sustainability strategy. But are these efforts enough to regain public and investor trust? Are they just playing catch-up, or are they genuinely committed to being a sustainability leader?
Actions speak louder than words. Investors and consumers will be watching closely to see if 3M delivers on its commitments. But the fact that they're highlighting these efforts in their earnings report indicates they understand sustainability's importance for their business, not just for PR.
Right? Sustainability is not just about doing the right thing, it's also about mitigating risks, building brand reputation, and attracting talent. It's a smart business move, but it has to be authentic. Now let's zoom out and consider 3M's long-term growth strategy. The report projected adjusted organic sales growth of 2% to 3% for 2025. How does that compare to their historical performance and their industry tiers? Are they being ambitious enough?
Historically, 3M has been a steady grower, prioritizing profitability over rapid expansion. Compared to some of their peers in the industrial space, that 2% to 3% growth projection might seem a bit conservative. But it's essential to remember that 3M is a massive company with a global footprint. It's harder to move the needle when you're already a giant.
So size matters.
Yeah.
But they're also operating in a somewhat uncertain macroeconomic environment, as we've discussed. Are they being too cautious, or are they striking the right balance between ambition and realism?
That's the key question. It's like they're trying to navigate a tightrope walk,
Yeah.
balancing their legacy businesses with investments in new growth areas, all while managing these significant PFAS liabilities.
You've perfectly captured the complexity of 3M's situation. It's a fascinating case study in how a company balances short-term challenges with long-term aspirations.
Absolutely. And it raises a fundamental question. Can 3M reinvent itself for the future while simultaneously addressing its past? Can they be both an innovator and a responsible corporate citizen?
That's the challenge they're facing. And frankly, it's a challenge many companies will likely face in the years to come. How do you balance growth with responsibility? How do you navigate a landscape where stakeholders are demanding more transparency and accountability?
3M's journey offers valuable lessons for other companies grappling with similar questions. It's a reminder that sustainability isn't just about checking boxes. It's about fundamentally rethinking how you do business.
It's about integrating sustainability into your core strategy, your innovation pipeline, and your corporate culture. And it's about being transparent and accountable, even when it's difficult.
It's about recognizing that sustainability and long-term value creation go hand in hand.
Well said. We've covered a lot of ground in this deep dive, from 3M's financial performance to their innovation efforts, and of course the ever-present PFAS challenge. But there's one more crucial aspect we need to explore, Middle. How is 3M specifically addressing those PFAS liabilities? What concrete steps are they taking to mitigate the risks and clean up the mess, so to speak?
That's the crux of the issue, isn't it? It's not enough to just talk about sustainability. You have to demonstrate it through concrete actions, especially when dealing with something as complex as PFAS.
Where the proof is in the pudding, as they say. So let's get down to brass tacks. What specific steps is 3M taking to address these PFAS liabilities and mitigate the risks?
They've laid out a multi-pronged approach. First and foremost, they're actively phasing out the manufacturing of PFAS. They've set a goal to completely exit PFAS production by the end of 2025, which is a huge undertaking considering how deeply embedded these chemicals were in their product lines.
That's ambitious, to say the least. But how are they actually going about replacing these forever chemicals? Are there viable alternatives out there?
That's the million-dollar question. 3M is investing heavily in research and development to find alternative materials and processes for their products. It's a complex challenge, as PFAS offered unique properties like water and stain resistance, durability, and heat tolerance. Finding replacements that can match those performance characteristics while also being environmentally friendly is no easy feat.
It sounds like they're facing a steep learning curve. But it's also an opportunity for 3M to innovate and potentially emerge as a leader in this space. Now, phasing out PFAS production is just one part of the equation. What about the contamination that's already out there? How are they addressing that?
3M is also investing heavily in remediation efforts to clean up PFAS contamination at their manufacturing sites and in surrounding communities. This involves working with regulators and environmental experts to develop and implement effective remediation strategies, which can be quite costly and time-consuming.
It's a long road ahead, that's for sure. But it's a necessary step to rebuild trust with communities that have been impacted by PFAS pollution. And of course, there's the legal front. 3M is facing numerous lawsuits related to PFAS. How are they handling those?
They're engaged in a complex web of legal proceedings and settlements. This involves negotiating with plaintiffs, working with regulators, and participating in credit cases. It's a costly process, as we've seen from the $3.8 billion in litigation costs they incurred in 2024.
It seems like they're throwing a lot of money at the problem, which is understandable given the potential liabilities they're facing. But what are the long-term implications of these legal battles? Could this drag on for years?
It's definitely a long game. The legal landscape around PFAS is still evolving, and it's hard to predict how these cases will ultimately play out. Some legal experts believe this could be the next asbestos, with litigation stretching out for decades.
That's a sobering thought. So for investors looking at 3M, these PFAS liabilities are a major wild card. It's difficult to assess the full financial impact, which adds a layer of risk to their investment.
Exactly. And it underscores the importance of looking beyond the headline numbers and digging into the details of how 3M is managing these liabilities. Investors need to ask tough questions about the potential long-term costs and how those costs might impact the company's profitability and growth prospects.
This deep dive has really highlighted the complexity of 3M's situation. They're facing a multifaceted challenge with these PFAS liabilities. It's a financial burden, a reputational risk, and a test of their commitment to sustainability.
And their experience offers valuable lessons for other companies, even those not directly involved with PFAS. It underscores the importance of proactive risk management, transparency, and accountability. In today's world, where stakeholders are increasingly demanding responsible business practices, companies can't afford to ignore potential long-term consequences.
You've hit the nail on the head. This isn't just about 3M. It's about a shift in corporate responsibility. Consumers, investors, and regulators are all paying closer attention to how companies impact the environment and society.
It's a wake-up call for the business world. Sustainability isn't just a buzzword anymore. It's a fundamental aspect of doing business in the 21st century.
Well said. So for those listening, as you evaluate companies, consider not just their financial performance, but also their environmental and social track record. It's all interconnected.
Absolutely. It's about looking beyond the short-term bottom line and considering the long-term sustainability of a business.
And that brings us to the end of our deep dive into 3M's Q4 2024 earnings report. We've explored their financial performance, their innovation pipeline, their sustainability efforts, and of course the ever-present PFAS issue.
We hope this deep dive has provided you with a more nuanced understanding of 3M's current position and the challenges they face.
Remember, this is just a starting point. We encourage you to do your own research, stay informed about 3M's progress, and think critically about the broader implications of this story for the business world as a whole.
Because ultimately, 3M's journey is a reflection of the larger questions we're all grappling with. How do we balance economic growth with environmental and social responsibility? And how do we ensure that businesses are operating sustainably for the long haul?
Those are questions worth pondering. And we hope this deep dive has given you some food for thought. Thanks for joining us.